Hi there, everybody. Tim Knight here, slopeofhope.com. Thank you to all of you for your support of the sponsors on the website. Remember to click away at any ads you see of interest. We've got a lot of cool sponsorships, and it's growing all the time, but just thank you. Thank you for that. I appreciate the support. Let's talk about charts. How about it? Now, for those who follow the blog even a little bit, know that yesterday evening I went long the SPY as a hedge, and for once I was glad that the hedge worked out nicely. The ES, can't pinpoint exactly where it was, but probably somewhere around here. The ES was up I remember it was up one single point, and what concerned me at the time was, we'll get rid of today, was this. I mean, that is a scary looking pattern if you're a bear like me. And I was thinking to myself, I do not want to wake up with a basket full of shorts and see the market soaring. And so for safety's sake, I got a relatively huge long SPY position. And I'm glad I did. It today was still a loser for me, but nothing terrible. And it certainly was ameliorated by that nice SPY long. Because as you know, we just crept higher all night and all morning. And we peaked, as we usually do these days, early in the day. And just kind of farted around the rest of the day. So, is this pattern still scary? Yeah, kind of. Let's explore the couple of different routes here that we could go. Let's look at the SPX, because that's got a lot more data to it. Now, it may seem glib to say, well, it could go up or down, but that is actually quite an important point here. Let me explain. We have, in the past, had circumstances where you get these inverted head and shoulders patterns that aren't at the bottom of a chart. You know, they're kind of in the middle of everything, that fulfill themselves quite nicely. So in this instance, we had this guy, and starting in that horrible month of September 2010, just boom, just look at that. I mean, just almost uninterrupted through February. Just an amazing run. What's that, about 30%? Maybe more. So that's the kind of thing that spooks me. So it could go that way. And people were wondering, where in the devil I got a figure of 1424. Let me just, you know what, I haven't verified it. Let's just figure it out together right now. So the low here is, let's call it 1158. And the neckline here is 1292. Let's do a little math on the fly here. So 1292 minus 1158, we got 134 points on the pattern. And we'll add that to the neckline in 1426. So I think I said 1424, something like that. Call it 1425. Nice, kind of easier to remember. Which would be way the heck up here. Could happen. Could happen. I've learned through the past almost 3 years now that anything can happen in this market. And so that is a possibility we have to respect. Now, what if we don't get follow through? What if this thing limps out and not only sinks beneath this breakout line, but even worse, or better if you're a bear, I mean, sinking below this would definitely cinch it, you know, like 1265. So let's say it gets back down around here, just kind of bleh. That would really be very positive, I think, for the bears, because those of you who watch me on Tasty Trade heard this, but for those of you who didn't, I'll just repeat my little analogy. The situation we've got with this guy is like the Broadway performer who has worked all his life to get there. And he did the community theater and the voice lessons and the dancing lessons, and he's finally on Broadway. And this is his big chance. And if on opening night he knocks them dead and they have a standing ovation, that's the equivalent of this guy. That's the equivalent of this phenomena here, like zoo, like that. If, on the other hand, he forgets his lines and his voice cracks and, you know, has a wardrobe malfunction and everything else, that'd be the equivalent of this kind of working its way away from that breakout. This is just a way of saying that all the faith and hope are pinned on that initial launch. And if the launch dissipates, then you're not going to put a lot of faith in that once hopeful Broadway star. So that's the analog of the day. Now, looking quickly at some commodity markets, gold had a very strong day. I came into the short precious metals all over the place, and I was not happy with that. I was short a little bit of silver, some gold, and some GDX, all of them losers. I still think that the prospect for a bearish route on precious metals is still very much there. In fact, today's action didn't change that a bit. It just didn't happen quite as soon as I thought. So I don't have any precious metal position right now at all. Here's silver. I've moved this line up to 30.45 on the March contract. And good old, we'll get to GDX later. Let me just quickly show you ZB, which hadn't done a thing. Look at that, 0.04%. Let's just call it no change. This guy hasn't been able to make up its mind. Earlier, when bearish hopes were high on the equity scene back on like the 19th of December, this was its Broadway moment, and it could have shot higher. It didn't. It has been stuck in this, 4-point or so trading range for weeks now, and it won't make up its mind. So it's not breaking down, it's not soaring, so I'm losing interest in watching this, and I'm certainly not trading TLT these days. I've got about a dozen or so ETFs. Let's look at them quickly, just talk a bit about each of them. AGQ, this is the Ultra Silver. I've got a gap here at 51.56. It's getting darn close to closing that. BGU, this is the triple bullish. We've got here this kind of line in the sand at 68.24, and I've pointed out huge bullish, huge bearish, kind of huge bullish right here. We have for almost 2 years now been making these big swings around this line. So the market basically stopped trending in April of 2010. It really just, it had been in this massive surging bull market, and people thought it was continuing here, but it's like a sine wave. It hasn't really made any firm direction. Emerging markets were a lot weaker last year. Today they were quite strong, up over 2%. China was very strong, of course, but we're still really within the confines of that triangle, and there's really no particular bullish pattern here unless it really oomphs its way past that triangle. I did mention GDX. This still, I think, could be one of the great shorts of the year. It was up 1.5% today, but I remain convinced that this kind of opportunity could still be not only here, but maybe even stronger, because this is a substantial pattern. But hey, I don't need stronger. This will suit me just fine, thanks. So I think this could be a good one. I remain obsessed with the euro. I think this also could be a terrific short. This is, I will mention, the only big short I've got right now. This is the only one. And I will get out if we push above this 1.2855 level, which isn't far away. I'm kind of counting on this thing to weaken pretty swiftly. Let's see, just a few more here. It's not a heck of a lot to talk about today. MDY, still haven't crossed this line. If we get kind of some overall market strength, I think you're going to find things like this will be in a new range, which is this kind of area. That is between the sort of recovery high and the breakdown point from last autumn. And that applies to MDY as well as things like IWM. You can see it better with the Russell 2000. If we zoom in here, you can see this kind of zone as being the new range if it cracks through. And we'll just wrap up with three more here. XLB. These are all just kind of interesting to me. I've put a slightly tilted trend line right there on XLB, the material select sector. XLF Financials. Financials has been very strong lately. It struck me that, looking at Bank of America, our friends at Zero Hedge were just all giggly on this day when B of A cracked $5. Ironically, and perhaps appropriately, that was the perfect day to buy it. I think when the snark level on any particular stock gets really bad, then it's probably a good time to buy. But yeah, I just distinctly remember the tweet going out, a Banco for America, because it was in the four handle, as they say. I certainly wouldn't get it now. It's run up a tremendous, high of 666. How about that? Another demonic sign for us. But yeah, junk like this has been powering the market higher. And finally, XLI is another ETF, which has been especially strong. And we are just about to close this gap right here. Let's adjust this a little bit. It's not quite right. There we go. At 35.61. Just about got that covered. So I'll close it here. And simply stated, if the rest of the week simply follows through from this bullish move, time to close up the bearish shop for a while. It's going to be a pretty bullish market. If it wimps out on us, then still have a pretty good shot. We'll see. Good night, everybody.